friends, today I am going to make a video on marginal costing. So we are going to learn marginal costing. What exactly is marginal costing? Marginal costing is again a method of costing which is quite different from absorption costing. Ma'am, what is the difference? Let us see. Now, what absorption costing says is, absorption costing, अगर आपने मेरा overheads का video देखा होगा, what exactly happens in absorption costing? We try to convert the fixed cost or the period cost into a product cost. मतलब अगर मेरा, let us say this is my factory and I am paying a rent of rupees 10,000 for this factory. Now, under absorption costing, what do? We change or we convert this 10,000 of factory rent into a product cost. हम क्या बोलते हैं कि our estimated overheads is, let us say, rupees 10,000, that is factory rent, and I am estimating or budgeting an output of, let us say, 2,000 units. So what I do is I put the burden of these 10,000 on these 2,000 and get an absorption rate of rupees 5 per unit. This is what we do under absorption costing. What are we trying to do? We are trying to convert the period cost into a product cost. एक full period cost क्यों है ये? 10,000 is monthly rent. उसको हम क्या कर रहे हैं? हम absorption costing में we are trying to convert it into a per unit cost. Now coming to marginal costing, what is the difference or what does marginal costing suggest? Marginal costing बोलता है there is no need to convert this into a product cost. अगर हमारा फैक्ट्री का रेंट रुपीज 10,000 पर मंथ है, that is 1,20,000 per annum, let it be 1,20,000 per annum only. उसको पर यूनिट कन्वर्ट करने की जरूरत नहीं है. So this is the second type of or second way of finding out the cost or the selling price. Now, how do we prepare the statement in that case? Now, under absorption costing, we can follow the cost sheet, but here the method or the cost sheet is something different. Let us see how does our cost sheet. Obviously, it takes a part of our cost sheet, but the way we record it is quite different. Let us see how. This is my format where I have particulars and the amount. Let us say I am making 10,000 units. So this is the amount column for 10,000 units. I have one more column for per unit. Now, the cost sheet or my income statement under marginal costing, how does it look? We start with sales. Now, let us say the selling price per unit is rupees 10. So for 10,000 units, what would be the selling price? 10,000 into 10, that is 1 lakh. Now, as I told you, we are not converting the fixed cost into a product cost. That means our cost is divided into two parts. One is the variable part and second is the fixed part. Now, variable part, we all know that variable is, it changes with the change in output, right? That is what is variable cost. So let us say my per unit variable cost is variable cost. Let us say my per unit variable cost is rupees 2. So if my per unit variable cost is rupees 2 for 10,000 units, it would be rupees 20,000. What I get is known as contribution. Why do we call it contribution? Why do we name it as contribution? Let us now, what exactly is contribution? Contribution is my sales minus variable cost, that is 8 rupees. हम इसको contribution क्यों बोलते हैं? We'll see it once we finish the table. So what is my contribution? My contribution is rupees 80,000. Correct? क्या किया हमने? I told you my cost is divided into two parts. One is the variable part and one is the fixed part. Variable part I have divided. What is left? The fixed part still remains. there. We still have to divide the fixed part to get my profit. So from this, I subtract my fixed cost. Now, fixed cost is again, let us say the rent, the electricity, all these are my fixed cost. Do you think these are my product cost or can I find out per unit cost? Beta, marginal costing yahi bolta hai that we should not convert this into a per unit cost. So obviously I will not have any figure here. I will have a consolidated figure. So let us say my consolidated figure is rupees 50,000. My fixed cost is 50,000. Now, once my variable cost is deducted, my fixed cost is deducted, all the costs are deducted from sales, what do I get? I get my profit or loss. Profit or loss. If it is a negative figure, it is a loss for me. So that is equal to 30,000. Now, this is how the statement under marginal costing looks. आगे बढ़ते. Now, there are few terms which are very important when we are dealing with marginal costing. What are those terms? The first term is contribution. जो हमने यहाँ पे भी पढ़ा. What is the formula for contribution? यहाँ पे we can see contribution is sales minus variable cost. So the first formula is sales minus variable cost. That will give me the contribution. Now you can either take it as 1 lakh minus 20,000, that is 80,000, or if you want to find out the contribution per unit, that would be 10 by 10 minus 2, that is 8. The second formula for contribution is profit. In case it is a loss, then loss plus my fixed cost. देखो, if I want to find out profit, what will I do? Contribution less fixed cost. So if I take this fixed cost this side, what will happen? Contribution is equal to profit plus fixed cost. That is the second formula for calculation of contribution. Now, why do we call it contribution? Because this is the part, this is that part of sales which is contributing towards my fixed cost and profit. That is why this is known as contribution. The name contribution says that it is the contribution towards my fixed cost and towards my profit. That is why this is known as contribution. Now, with contribution, let us see what is the second kind of formula that we need to know. The second formula that we need to know is PV ratio, or also known as contribution to sales ratio. Now let us see contribution to sales ratio. Now contribution to sales ratio मतलब क्या हुआ? Contribution by sales into 100, right? This is contribution by sales into 100. This is contribution to sales ratio. Now let us see how do we put it into numbers. Contribution 80,000 by sales of 1 lakh into 100. So that is equal to 80%. You can either put it in the total column. According to the total column, you can also put it according to the per unit column. If you put it according to the per unit column, it would be 8 divided by 10, again 80%. PV ratio will not change if you take it on all the units or you take it per unit. It will be the same. Why? Because both the numbers change proportionately, right? They are actually getting multiplied, so it will not change. Now let us go to PV ratio. Now what is PV ratio? The question that might come to your mind is, ma'am, why have you written it together? I will explain that to you. PV ratio, that means profit volume ratio. That means how much profit we are earning with the volume that we have. Now let us see how the PV ratio is, how PV ratio is calculated. Now let us say I have another units, that is 15,000 units. For 15,000 units, what would be my total sales? 1,50,000. Variable cost 2 into 15,000, that is equal to 30,000. What I get is 1,50,000 minus 30, that is 1,20,000. My fixed cost remains same. Up to a certain level, the fixed cost remains same. For our simplicity purpose, let us assume that at 15,000 also my fixed cost remains same. So that is 50,000. I get a profit of 70,000. Now, what is PV ratio? PV ratio is the profit volume ratio. Means, what is the change in profit with the change in volume? So, the first formula under PV ratio is change in profit by change in sales into 100. What is the change in profit with the change in my volume? That is change in my sales. Now, my change in profit is how much? 40,000. What is change in my sales? Change in sales is 50,000 into 100. So that is equal to 40,000 by 50,000 into 100. That would be 80%. Got it? This is my profit volume ratio. Now, let us see the other formulas of PV ratio. This is the first formula as I mentioned. Now here I am going to show you the second formula. Now, did you see that the change here is 40,000? Here, is there any change? No. So that means the change in this and the change in this will be same. If you see 80 and 1,20,000, the change is actually 40,000. Obviously, if there is no change in this, the change in this is because of this. So instead of change in profit, can I write change in contribution here? The second formula, change in contribution by change in sales. Again, the answer will be same, that is change in contribution 40,000 divided by change in sales, again 50,000 into 100, that would be 80%. Right? I have come from this formula, I have derived this formula. Let us go ahead. Now, this 40,000, how did I get this 40,000? I did 1,20,000 minus 80,000. How did I get this 50,000? I did 1,50,000 minus 1 lakh into 100. I'm just elaborating the formula. Now, let me take 80,000 common here. If I take 80,000 common here, what will I get? I will have to, this would be 1.5 minus 1, right? 1.5 into 80,000 will give you 1,20,000 and 80,000 into 1 will give you 80,000. And let me take 1 lakh common here. If I take 1 lakh common here, 1 lakh again divided, so it would be 1.5 minus 1 into 100. Now, denominator and numerator, do I have something common here? Yes, I have 1.5 minus 1 and 1.5 minus 1 common, which I remove. So what I get is 80,000 by 1 lakh. What exactly is this 80,000 by 1 lakh? 80,000 by 1 lakh is nothing but my contribution by sales. You can also take 1 lakh 20 and 1 lakh 50 common here. You'll get the same answer. But if you take 1 lakh 20 and 1 lakh 50 common here, you take it out. The inside portion would be same here again. And then you can deduct it. So 80,000 and 1 lakh is nothing but my contribution and sales. So can I say that the third formula that we have is contribution by sales into 100. This is the third formula for calculating the PV ratio. Now you understand why I wrote both the formulas together here. If you see, this and this formula is same. So I have derived this formula with this. That is why PV ratio is nothing but contribution to sales ratio. That is this here. This is with respect to PV ratio or how we calculate the PV ratio. Next formula that we need to know. I hope you have noted this down. If you have not noted this down, please pause the video and note it down. Now we are going to look into the third formula, that is break-even point. What do we mean by break-even point? Break-even point is the point at which there is no profit and no loss. So that means my profit and loss has become 0 here. If my profit and loss is 0, my fixed cost will still remain 50,000. We know that contribution is equal to profit plus fixed cost. My profit is 0. Fixed cost is 50,000. So my contribution has to be 50,000. So that this 50,000 minus 50,000 will give me 0. So I have a contribution of 50,000. Now let us take one small example. Let us say that each of you have 8 rupees. I am taking your session and I need to collect rupees 50,000 at the end of the class. Each one of you have 8 rupees in your hand. How many students should be there in the class so that I collect 50,000? One student will give me 8 rupees. So if I require 50,000 rupees, how many students have to be there? The number of students that should be there is equal to 50,000 divided by 8. That is equal to 6250. These many students should be there. Coming to our example, that means if one unit gives me a contribution of 8, 6250 units will give me a contribution of 50,000. So here I am going to make now 6250 units. If I make 6250 units, if I sell 6,250 units, the sale value that I will get is 62,500. 2 rupees gone as variable cost. So 6250 into 2, that would be 12,500. And I will be left with 50,000. Less fixed cost of 50,000, I get a profit and loss of 0. What does this show us? This shows that 6250 is nothing but our BEP, that is break-even sales. Or I can say 6250 is the BEP in units and 62,500 is the BEP sales. So now, coming back to the formula or how do we calculate our break-even point. We know that one student or one unit will give us 8 rupees as the contribution. Here, did you see that my fixed cost and contribution is same? It is equal, right? It has to be equal because my profit is 0. So that means I need a contribution of 50,000. How did I get 6250? I did contribution divided by what contribution? per unit I am getting. Right? Now, what is this contribution? This contribution is equal to my fixed cost. Right? 6250, how did I get? Contribution, which is equal to fixed cost divided by contribution per unit. So the first formula for BEP is fixed cost divided by contribution per unit. 50,000 divided by 8. That is my first formula for BEP. Now, if you do this, what will you get? You will get BEP in units. You will get 6250 units as the answer here. Now, what if I want to know the sales? Simple. This will give you the units. Multiply it with the selling price. So, BEP in sale or in rupees will be fixed cost divided by contribution per unit into selling price per unit. So 6250 into 10 will give me 62,500 rupees. That is my BEP in value or in rupees. Okay, ma'am. Now let us see the third formula, which is very interesting. Can you see here? The formula that you have used is fixed cost divided by contribution per unit into selling price per unit. Can I write it like fixed cost divided by contribution per unit by selling price per unit? Can I write it like this? Yes, this and this are same. What is contribution per unit by selling price per unit? It is PV ratio. So the third formula for BEP in rupees is fixed cost divided by PV ratio. This will also give you your fixed cost or your break-even point in rupees. Let us see. 50,000. What was our PV ratio? If you see, go back and see, our PV ratio was 80%. So 50,000 divided by 80% is how much? That is equal to rupees 62,500. This is our break-even point. What does break-even point do? Break-even point is only covering the fixed cost, having zero profit and loss. Now, going ahead, the last formula that we are going to see is margin of safety. What is margin of safety? Let us see. Fourth one, margin of safety. Beta, margin of safety are those units which are responsible for the profit. Let us see how. Now, 6250 units is my break-even point. It is covering the total fixed cost. Let us say I am making 10,000 units. Out of these 10,000 units, these 6250 units is my break-even point. That means I start producing. I reach 6250 units. I have covered my fixed cost. Am I right? Now from 6250 to 10,000, how many more units? 10,000 minus 6250. That will give me 3,750 units. These 3,750 units I am selling at 10 rupees. So 37,500. I am incurring a cost of 2 rupees per unit. That will be equal to 7,500. So I have a contribution of 30,000. Beta, the first 6250 units have already covered the fixed cost. So for these units, there is no fixed cost left to cover. What I get is the profit of 30,000. Can you see the profit here is 30,000. What happened? 6250 units is the break-even point which is taking care of the fixed cost. The rest 3750 units are responsible for the profit that we are earning. That is known as margin of safety. So did you see here? In this case, my contribution was equal to my fixed cost. In this case, my contribution is equal to my profit. So what will be the formula for margin of safety? The first formula, margin of safety, again in units, would be, let us go back and explain you in the form of an example. I need 30,000 rupees. Each student is giving me 8 rupees. One student is giving me 8 rupees. I need to collect 30,000 rupees. How many students should be sitting in the class? 30,000 divided by 8. What is this 30,000? This 30,000 is nothing but my profit. My contribution in this case, but my contribution and my profit is same here. So profit divided by contribution per unit. Simple. Break-even point mein we were doing fixed cost by contribution per unit. Margin of safety mein we are doing profit by contribution per unit. So that would be profit of 30,000 divided by contribution given by each unit is rupees 8. So 30,000 divided by 8 will give me 3750 units. Is that our units here? Yes. Now coming to margin of safety in rupees. Again, this has already given me the units. If I multiply it with the selling price, it will again give me the amount in rupees. So that would be profit divided by contribution per unit into selling price per unit. That would be 3750 into 10. That would be 37,500. This is our margin of safety in rupees. Again, coming to the third formula, I can also write it like profit divided by contribution per unit divided by selling price per unit. Contribution by selling price will give me PV ratio. So profit divided by PV ratio is again the third formula for calculating the margin of safety. So when we are dealing with questions on marginal costing, generally we get questions like what will be the BEP, what will be my PV ratio, what will be my margin of safety. These are the important formulas that we are going to deal with under marginal costing. One more very important question that generally we see under marginal costing is how much sales should we get? How much sales should we have to earn a profit of, let us say, 70,000? In that case, how will you solve the question? I am just giving you a small question, that is, how much sales should be there to earn a profit of 70,000? So in that case, I need a profit of 70,000. My fixed cost is already 50,000. We know that contribution or target contribution is equal to fixed cost plus my profit. That is my desired profit. What is fixed cost? Fixed cost is remains fixed, that is 50,000. And what is my target profit? My target profit is 70,000. So how much contribution should I get? I should target a contribution of 1,20,000. Now this is my target contribution. Again, same thing. Per unit is giving me a contribution of 8 units. So to get the target contribution, what should be my sales? My sales should be target contribution divided by contribution per unit. I need a total contribution of 1,20,000 and each unit is giving me 8 rupees of contribution. So how many units? 1,20,000 divided by 8, that is 15,000 units. That is what, when I took here 15,000 units, we got the answer as 70 thousand. So this is the third kind of problem that you can get under marginal costing. I hope you are clear with the marginal costing questions. Please subscribe to my channel, and also please join the channel on Telegram. You will find the link in the description section. Thank you.